Hello traders, today I want to talk about the Bollinger Band indicator. It's a very powerful tool for the traders to measure the volatility in the markets. And here I use the Bollinger Band set at 50 with deviation of 2. So 50 deviation 2. So that's what I use. I don't use the 20 with deviation 2. I use 50 because the moving average 50 is a very important moving average. You will notice that when the price is above the moving average 10, either exponential or a simple moving average 50, when the price is above exponential moving average 50 or a simple moving average 50, the price is bullish. And when the price is below the simple moving average 50 or exponential moving average 50, the price is bearish. If you check carefully the RSI indicator, when the RSI crosses the 50 middle line, you'll notice that at the same time the price in most cases will be crossing the simple moving average 50. So when you are using the RSI indicator, be aware of it. When the price crosses the middle 50, check your simple moving average 50. You will notice in most cases the price also is crossing the simple moving average 50, because a lot of traders will buy when the price crosses the middle point of 50 of the RSI. So here I have, because of this observation I made on the RSI, that's why I use this Bollinger Band 50 deviation 2. Is set with the simple moving average, not the exponential moving average. That's what I have on my software here. So I use the simple moving average as the default one. I can change it to the exponential, but it's working perfectly, so I didn't bother to change it to exponential. But so it's a simple moving average 50 deviation 2. So as you can see, how do you use it? It's very important to know how to use the Bollinger Band indicator. Usually the professionals use the Bollinger Band indicator to place their stop loss, because if they are selling, you will notice this in every time frame, even 15-minute chart, especially those who love the stochastic indicator. If you want to use it more carefully, I know people are scalping all the time, you see like overbought condition, try to sell it when the price reaches the edge of the Bollinger Band. Don't sell in the middle like here. Don't sell there. Try to look for opportunity to sell on the edge of the Bollinger Band. But if you're working only with the Bollinger Band, you may lose money, because there are other things you need to consider. Consider mostly the chart pattern, and your rate of success will be very, very high. Even the professional will tell you that. So the Bollinger Band, how do we use it? This is the hourly Bollinger Band of the GBP JPY, a very volatile currency pair. That's why I choose it for this Bollinger Band, talking about volatility here. So there are two parts for the Bollinger Band. The upper part, which is above the middle line, the upper part, which is this section here, above this orange line, that's the bullish section, and below that middle line is the bearish section. So usually some professional will wait. When they see the price rising like this, they don't get in. They wait till the price crosses the middle line, pull back like it did here, and they will buy here, or they will look for reasons to buy just near when they see the price right from the edge and it reaches the middle. They will buy here. If the price turn around, you know that the bearish, the downward movement didn't finish, because then when the price is going down, the price will be riding below the middle line. As you can see here, it is riding below the middle line. So it's a bearish situation now. We are not in a bullish situation. So the professional knew, and they will only, some of them will only buy when it crosses again above this middle line and retest it. Very important. So that's how you use it. And also, when you're going to sell, don't sell in the middle. I repeat myself again, don't sell in the middle, always sell on the edge. And when you're placing your stop, try to place your stop whenever you are, suppose you are buying somewhere here. The professionals who are buying here, they won't place their stop in the middle here. No, they will never do that. They will place it outside the band. You place your stop outside the band. So you can use the Bollinger Band to know where is the best place to place your stop. you know. So if you are selling here now, yeah, even though a lot of people doing it, some people they sell all the time, the price touches the Bollinger Band, they will sell. You see, these are the people here. This is another way they misuse this Bollinger Band indicator by selling on the edge anytime. You see, it came here, people sell. Maybe they are scalping, they make a bit of profit here. They sell it here, they make a bit of profit. They sell it here. Okay, that's their trading tactics, so that's fine. I hope they know what they are doing. So if they are making money, it's good, you know. But as you can see here, the price was above the 50 line, which is bullish anyway. I usually sell with the Bollinger Band if I see chart pattern, you know, chart pattern, double top, and then outside the band. Then I sell nicely here, double top here. I will definitely sell here and place my stop outside the band, which is very secure place to place. Just don't put it completely at the edge. Put 10 pips in case somebody trying to take you out of your trade before you even get paid, you know. So this is how you can play with the Bollinger Band. And for those who love the stochastic very much, you know, when the price is above the middle line like this, you can use your oversold stochastic level to buy. So you know you're in a bullish session, you buy with stochastic like this, you pull back again here. So when you are buying like this here, you know the price in the uptrend, you can put your stop below this line here. Or if you have a lot of money, then you will put it completely here, which is a bigger, a risky business, because if it turns against you, you lose more than you're going to win. So in this case, if you know that uptrend is established after two higher lows, you know, yeah, first low here, second low, then you draw your trend line like I said before. Then you know the uptrend. So when you are buying here in this uptrend, you put your stop below this middle line here, you know, below this middle line. And so again, if you pull back near the trend line, you buy again here, and then you put your stop here. And as soon as the trend line is broken here, you see, it's broken, it's retested, you know, here, and then you sell. And where do you put your stop? Don't put it inside the band, put it outside the band. That's how you use your Bollinger Band to place your trade and also to manage your trade by knowing exactly the best place to put your stop loss. Sometimes there's something very interesting that is happening, you know. You will see, I'll tell you this now, very important. The price display a low here. That's what they tell people most of the time. Most of the trader will tell you one low is formed outside the band, another low is formed inside the band, and then you buy. That's what they tell you all the time. But don't just trade it blindly, you know. This is a double top. See whether it's a valid top, validation of support. Check it. Don't just say because you see one is formed outside, another one is formed inside. That's what they tell, and then you buy. But don't do it blindly. Check, yeah, validation of support and resistance, retest validation, and then remember there's a resistance here. Yeah, the price can turn around here. So after you break this, you know that you are in, and then you pull back nicely here, and then you are in. So don't forget every other thing when you are using one method. Respect the trend. Yeah, in the uptrend, you want to have a higher lows, a higher high, and in the downtrend, you want to have a lower lows and a lower highs. And if you respect that, and also plus the chart pattern, knowing that the price is a number one indicator, you can use this Bollinger Band indicator with success. Right now, as the market is open, the GBP JPY is in a downtrend. As you can see, the trend line confirming, and the price is riding below the middle line of the Bollinger Band. So the next target, as I say to you, always have your target. If you get into a trade, have a target. Have a target. You know, especially if you are working and then you're going to work, you place your trade and you go in, you don't have a target. Sometimes you have a winning trade and then later on they turn around and then you become a loss, you know. At least move it to break even quickly if you can. Yeah, if you have a winning trade, move it to a break even quickly. So this, if somebody sold it here or here, you know, nearly trend line here, then the next target for them is this level here to retest this support level here. The validation of the support and resistance line is the key to successful trading in every case. Whichever indicator you are using, whether you put 100,000 indicator, it's not going to change anything. It's only yourself and the support and the resistance, the validation. These are the two keys. You can look in 100 years, you know, everybody will tell you the same thing. Why the moving average crosses? Because the price hits one support or hits another resistance, and then the pressure and the reaction causes the moving average to bend and to cross. It's not because there's some miracle or magic in the moving average that they are just crossing. So this is the Bollinger Band part 1, how to use it. Till next time, be happy and enjoy yourself. Thank you.